Inside the MBA, your bi-weekly window into what's happening at the MBA.
Hi, I'm Adam DeSanctis. Welcome to another episode of MBA's CREF Corner Office Conversation. With me today is Matt Galligan, a commercial real estate finance veteran with over 4 decades of demonstrated success and leadership in the industry. Matt is currently Vice Chairman of Real Estate Finance at CIT Group and also serves on MBA's Board of Directors. He is in town this week for MBA's CREF Senior Roundtable meeting. Matt, thank you for joining us today.
Thank you, Adam. It's a pleasure to be here.
Tell me a little bit about the Senior Roundtable meeting occurring this week, what some of the goals are, and the importance of MBA bringing leaders together.
Sure, Adam. I think it's one of the best venues that MBA has, and MBA has a lot of good ones. But this pulls together all the senior professionals in real estate finance across product types, across regions. And we get some presentations. We're going to talk a lot about multifamily this week. But inevitably, you start talking about other product types and other issues. So it's really a great education for somebody like me. You can't get out of the office all that often. But when you do, you want to make sure the investment of your time is worth it. So it's a fantastic venue.
And it's my understanding you were recently promoted to Vice Chair at CIT. First off, congratulations. Second, tell us a little bit more about the business of CIT in commercial real estate.
Sure. We're about a $6 billion balance sheet as we speak today. We're in the process of consolidating with Mutual of Omaha's bank, which will add another $2 billion. So it'll be about an $8 billion balance sheet, which is very sizable. We're national in scope. We're concentrated on the East Coast and particularly in the Washington to Boston area, and also on the West Coast, highly concentrated in California, but also up through Seattle. So we finance across the country because we follow our clients. And it's a nice franchise. You know, there's multifamily lending, particularly in the state of California. We do a lot of Class B workforce multifamily. We do we do suburban office buildings in select locations. We do a small amount of retail. I think it's about 9% of our portfolio, about the same size for industrial. So it's a nice complement of businesses. Over the years, we've financed condos. We're kind of stepping away from that given the current market conditions.
So let's talk about the commercial real estate market right now. Our data shows that originations are up year over year, interest rates are low and have gone lower a lot of the summer. Where do you see the market right now?
Well, it's an interesting time. In 1981, the prime rate, which is what we benchmark from, was 21%. Now we're down in the rates. I heard today that one of the large corporations financed themselves with 30-year bonds at 3%. So, it's obviously the opposite of the spectrum. In the case of 1981, it was very clear that one of two things was going to happen. The world was going to blow up, and people honestly thought that, okay? Or that Paul Volcker, almost single-handedly, would wrestle this beast to the ground and some balance would come to the economy. And ultimately, that's what happened. Today, I don't think it's as clear-cut. You know, interest rates are at historic lows, yet if you look at Europe's rates are 0%. The supply of money seems somewhat ridiculous. The purveyors have changed significantly. You have the debt funds who are out there so aggressively, and they're able to finance at very low rates. So it's, the securitized providers, life insurance companies are doing floating rate. So everybody's kind of nipping at the edge of their competitors so that they can get volume. In our case, in the bank spectrum, we're being repaid almost as much as we put out. We'll put out $2.4 billion this year. We expect to get back $2 billion and that's been the case for about 2 years now. And that's a systemic problem. So it's a difficult time. If I can just make one other comment, in the banking sphere, non-real estate, but just overall, and I think this goes for large corporations in general. A lot of the costs have already been taken out of those firms, and as a result of it, there's not a lot of place to go. And the revenue line is very weak, and that's why I segued about all this competition and an inability to make things stick to the balance sheet. In order for corporations to move forward, they almost have to merge and cut the back office of one entity or the other in order to have cost savings, because we don't see any really strong growth in the revenue cycle.
Mm-hmm. And let's talk about those entering the industry. I read a great profile of you in Commercial Property Executive a couple weeks ago. Your wife and your 2 sons are all in the industry. What advice did you give your sons when they were first starting out that you'd like to share with others who are interested in a career in commercial real estate?
Well, work hard, obviously. Do the best you can at all times. Be a person of integrity. But also be good and try to help your neighbors, okay? The people that are next to you or anyone else. Because as your career develops, these are the people that you're going to grow with. And you may work with them again, you may not, but they're a good networking capability. I will tell you that with any younger people, I emphasize networking. I think people should be doing it in their 20s. I did a lot of it then. I think that people should be doing it as they advance in their career. And I think it's a real mistake when you start to get toward the end of your career that you're not doing that, because in all likelihood, somebody like me wants to do something else. You need a network to figure out what that is.
Matt, it was great talking to you today. Congrats again on your recent promotion. Thank you for your leadership and your commitment to MBA.
Great. Thank you, Adam.
This is Mortgage News Network.